Welcome to our Insurance Investments and All About Town podcast. Our podcast is dedicated to empowering listeners with knowledge they need to navigate home and auto insurance, healthcare insurance, make smart investment decisions, and stay informed about local happenings. We provide insights and practical advice, helping you preserve your financial future while staying connected to your community. Tune in as we break down complex topics into actionable steps for a better, more informed life.
It's a mouthful.
It is a mouthful.
Yeah, you did a good job with that.
Yeah, thank you. Once again, like I said last time, they didn't see the 6 takes it took us to get here. So, well, here we are. We are
Back
on
again.
podcast number 3.
Yep.
So I'm Eric Sporing, financial advisor, owner of ECS Capital Investments. To my right this time, don't adjust your set. Lorne, Tara is on my right this
Had
today.
to make a slight adjustment.
Yes. But with Von Fire Insurance and our special guest today, a good friend of mine, Lorne Meinershagen with Meinershagen and Co.
Yes.
Welcome,
Thank you, Eric.
Lorne.
Thank you very much.
Yeah.
Appreciate it.
Yeah. So I got a question.
Oh, here we go. Okay,
I'm
ready.
always full of questions. You'll find out.
He does.
So,
You never
Okay.
know what he's
Yeah.
going to pull out. Okay.
so we had our second podcast, right?
did,
The
yeah.
first one we had, we had 60-some people
Good.
watch it, right?
It was 49.
Oh, was it?
Yeah.
Okay. Well, your
I
dad.
think it was 49 and my dad was 2.
Okay.
I think is
Well,
what we decided.
speaking of your dad.
Or it was 51. It was one or the
Yeah,
other.
something like that.
Yeah.
But that's the reason why I ask is that your dad's our biggest critic. So I wanted to know what he said.
No, I didn't even get any feedback, which tells me my dad didn't watch. So I'll have
right.
to ask him about that and make sure he catches up.
Okay.
He
yeah.
missed a riveting episode.
You're
so.
right. Yeah, you did, right?
did, yeah.
You hogged the spotlight.
I
so
did.
He would have got
Yep,
plenty of
19
critique.
minutes of me trying desperately to figure out where to look on the camera. It was great.
That was the only critic from the first
Was it?
episode, that
Yes.
Tara didn't look at the camera. So,
So,
but,
okay,
yeah,
noted.
You noted. Look,
All right,
watch
I need
the
to look at the
camera.
camera.
So,
All right.
I'm still not sure where it is. So.
Right.
yeah. Well, today we're going to talk about, I think, Tara, you're going to talk about some voluntary benefits, I think
I
is
am.
what you mentioned. And Lorne, he will talk about what's going on in the accounting world, CPA world. And today I was going to talk about some, contribution limits. We're getting ready to kick into 25, and I thought it great with Lorne being on board
great
today.
topic.
Great topic to, bring Lorne in with as well. So, listeners, viewers, I guess, they're not listeners, they're viewers, so they could be listening. You might see we have a plate here. I will explain that at the end of today's episode. So,
All right, the suspense is already killing me.
well, let's get started. Tara, why don't you kick us off? Now, remember, you've only got 10 minutes.
Okay, all right. I'll try to keep it to 10.
To keep 10 minutes. So, but tell us a little bit about voluntary benefits when it comes into the healthcare world and how
Sure.
that can benefit small businesses and just individuals as a whole.
Sure. So voluntary benefits are actually some of my favorite benefits. As an employer, it's a great way to improve your benefit offering for little to no cost.
Okay.
As a consumer or an employee, it's also a great way to have some added protection that's extremely inexpensive. A lot of people just flat out will ask, Tara, what are voluntary benefits? So voluntary benefits are really they're benefits that your employer isn't paying for, but they're offering. So they can be things like hospital indemnity plans, critical illness, life insurance, or voluntary life insurance. So there's all sorts of different voluntary benefits. My rule of thumb is if it's offered and it's inexpensive, go for it.
Okay.
They're really meant to enhance your current employee benefit package. So the typical employee benefit package is going to have things like medical, dental, vision, and probably a small amount of life that they're going to give everybody.
Right.
Your voluntary package is really meant to supplement some of that. So when we talk about an accident policy or a hospital indemnity policy, or maybe we talk about a critical illness policy, those are what we call an indemnity policy. And indemnity, the most recognizable indemnity plan involves a quacking duck. Right?
Okay.
We all know that duck.
Yeah.
Those policies are meant to actually give you a cash payout for certain happenings. So maybe a broken arm. Right. So a fracture will pay you X amount of dollars once it's happened. For an employee who maybe has a higher deductible for their medical insurance, those are great plans to have, right? You have an ER visit, they're going to give you a little bit of money. You can use that to pay toward your deductible, right? Because you're going to get a bill for your deductible. Maybe it's copay, whatever. But they're great little plans, and they're extremely inexpensive. If you're a mom and a dad with a couple of kids playing sports, do not miss your accident policy if it's offered at work. It will pay off in dividends at some point, right? So you may pay for a family plan $12 to $13 a month, but let's say you have one ER visit and a broken arm, you're already getting paid a couple $100s. So it's a really good return on investment, especially if you're accident prone. Another one I'm a huge fan of is voluntary life insurance through your employer. So your employer may give you anywhere from, we'll say, $10,000 to $50,000 in life insurance free of charge. They're giving that to everyone, and they're covering it. There's typically also a voluntary life option that you can choose. The advantage to taking that voluntary life is, number one, it's inexpensive. So it is going to be less expensive than if you were to go out and try to buy life insurance on your own. It's going to be term life insurance, and it's only typically, some of them have riders that you can take them with you, but typically only going to last while you're with the employer. But you can get sometimes up to $100,000 and $150,000 in life insurance without any underwriting at a discounted price, because they're getting group pricing on that. So I always advise people to max that out. You can usually also take a children's rider and a spousal rider on those. Now those will be a smaller benefit, but I am a proponent of life insurance, so I encourage everyone to get the max that they can, especially if it's through work and it's inexpensive. Let's think about another one. There's some off the wall voluntary benefits out there, things like pet insurance.
Pet insurance.
You laugh, but it is one of the most asked for benefits.
Is it really?
Yeah, of new people entering the workforce. So
what for?
Right.
What does it cover?
It covers emergencies for your vets. It can cover, for your pets.
Yes.
It can cover vaccinations. It's essentially a medical policy.
For
quote
your
unquote,
animal.
For your animal.
Huh.
Oh my God.
And it's extremely popular.
Really?
Yes.
Now, when you say animal, because Lorne and I both kind of, we're farm
I don't
boys,
think
right?
it's goats
Right.
now. No, I don't think we're talking
We don't want to talk about
livestock.
our insurance policy.
Yeah.
Right. But
I think we're talking dogs, cats, those things. But that's a popular one. Legal services. Legal services is extremely popular, very inexpensive, and it's a great way to, a few dollars a month, and you can have somebody draw up your will. I mean, that's a valuable ad.
wow.
We talked about accident. I may be really short today. I'm actually kind of excited.
That's all right.
This one.
Well, I've got some follow-up questions,
Okay,
so I might get you.
good.
Yeah, so.
I'll probably think of some more, but those are the ones that come to mind. Another is sometimes you can have an EAP rolled into your benefits package. That's an employee assistance program. And in an employee assistance program, sometimes it offers things like maybe it's family counseling, maybe it's financial counseling. And those are great little benefit packages too. So not typically something that you can elect as an employee. Your employer either has one or doesn't have one, but there are some great resources in an EAP or employee assistance program as well.
Interesting. Couple questions I thought of is, you talked about life insurance, through business, and a lot of that, unless there's a rider involved, you can't take that with you. But some of these other, like the accident policies and things like that, are they stuck with the employer, or if you leave, can you keep paying that premium and it follows you?
That's all going to depend on the carrier. So I do know of one carrier, depending on how the contract is written, that will then let you take it with you, right? They're going to just keep pulling out of your bank account.
Right.
So it all depends.
Okay.
And on the life portion, what you're looking for is, is it convertible? Can I take it with me? Is it convertible? And sometimes they are. So and that's a great benefit. Now, they may not be as inexpensive when you go to take it with you.
Right, because you're getting that discount, as you said, through the employer.
Yes,
so.
and by all means, I think everyone should have a policy outside of work. But
Right. So, and then, one other thing I heard you say, and I just wanted to clarify, is you said family. So when it comes to these, voluntary benefits, I think in my mind it's just for the individual. I didn't realize that you can put the whole family on, just like a healthcare plan. You can do the whole family.
Yes, you can
Interesting.
for most of them.
Okay.
Yeah. So it's just a different price point, obviously, right? So the accident insurance may cost $8 for an employee, but you go to add your family and suddenly it's 16 instead. But yes, for most of them, adding your family is a possibility.
So, I'm sorry, it's prompting.
You always
some
ask good questions, right?
There's always more questions here, but something else I just, like healthcare plan, like yourself. So, you go to Lorne and you offer him a healthcare plan. Does the business have to have a healthcare plan for you to do the voluntary benefits,
No.
or can you just
No, totally different package. So I actually work with some smaller employers, maybe that are opting to use either a QSERA or an ICRA or an HRA, or maybe they're using a stipend to pay for their employees, to help their employees pay for benefits.
Right.
And then they're using a voluntary offering on top. So the difference in how that looks, let's say, Lorne, you are trying to hire a new accountant, and you have a post out for hiring.
Yep.
And in your post, you say, we offer medical, dental, vision, life, 401k.
Okay.
Imagine if it said, we offer medical, dental, vision, life, 401k, accident,
Right.
voluntary life, and those are at no cost
Okay.
to you, right?
Right.
But it may be more attractive to an applicant because you are offering more than someone else down the road.
Interesting. So it's not that I'm paying for it as an employer.
You've got
It's
it.
just an offering of that product.
Correct.
you have
Okay.
Correct. And typically, because they are so inexpensive, and if the broker takes the time to educate your employees on how it can be used and the
Right.
benefits of them, you see pretty high enrollment.
Interesting. Okay.
Okay, that's great information. Back in the day, I remember that quacking duck. I had one of his products when I was younger, and it was just that a gentleman just came into our place of business and, hey, this is what we have. And at that time it hit a chord. I mean, I'd had a grandmother that had cancer, and
Yes.
and I bought a cancer policy.
Yep.
And so
And something like a cancer policy actually just has one large payout for the diagnosis,
Okay.
typically. So, right, it'll be, I don't know, we'll call it $20,000, but it has some exclusions on the types of cancer it can be.
Okay.
Right? But, and that's meant to help you with, your co-pays, your lodging, getting where you need to go, supplementing income if that's what needs to happen, because maybe you're out of,
Work.
right.
Yep.
Okay.
So just another way to financially protect yourself from some of the things that are happening every day that most of it, we kind of go through life with blinders on. All of us do, right?
Sure.
Thinking, we've had all these good years, never had to use it. And much like every insurance product, I say this all the time, you really don't value it until you have to use it.
To use it, right?
Yep.
Yeah, exactly. So, well, that's great information. Tara, like I said, it's a great, like you said, value add if you're a
It is.
business owner, small or large. It's a great value add. So, great information this morning. I'll transition over to me. I'm going to cut you off before you take off
Please,
and
I
run
know.
again.
I think I did well.
You did well. I
Okay.
think we're only 15 minutes
That's
in.
not right because of the number of times Eric messed up the intro.
Throw me under the bus.
I will.
Okay, all right. So I was going to talk about IRA contribution limits, 401k contributions going into 2025. Each year, not every year. I mean, Lorne can contest to this. But the IRS sometimes will up contribution limits. Some years they'll keep them flat, but usually something switches in there, and maybe Lorne can elaborate a little bit too on a new limit that the IRS is rolling out. You can help me out a little bit with that. So, but in 2025, the IRS has come out, and traditional IRAs, Roth IRAs, there is no change to the contribution limit.
Okay.
It's at $7,000 into the traditional and Roth IRA. And if you're over 50, you can do the catch-up provision of $1,000. So if you're over 50, you can actually put in $8,000 to a traditional IRA and your Roth IRAs. And so on Roth IRAs, Lauren, as well as I do, they do have deductibility or phase out limits is what I should call it. If you make too much money, you can phase out and not be able to do a Roth IRA. Still a way to do it, but we'll talk about that off camera if somebody's interested in doing a Roth IRA and makes too much money. It's legal. I'm not doing anything illegal. But,
and many times you'll hear the term referred to as a backdoor Roth.
Backdoor Roth, right.
And it's nothing more than using what I would say traditional Roth provisions and then rolling over.
Right.
So it's nothing. It sounds a little bit more dire than maybe what you might think, but it's nothing more than using the traditional rules and then getting it into the Roth.
You got it, exactly. So, so like I said, no real changes there. Now we did have a little bit on the SEP IRA. So SEP IRA is what we call a simplified employer plan. It is kind of just for, I say it's just basically for an individual, a carpenter that has business and it's just him. It's a good product for him to do. I shouldn't say him; it could be a her too. You can do up to $70,000 into a SEP IRA, but it is 25% of your compensation. And Lorne could probably exaggerate. It's of your adjusted gross income or the 70,000? What's it?
Usually when I'm looking at that, we're doing it off the W-2 wage or something that's similar. Now, when you're talking about a small business owner, then it's going to be the net earnings of that particular
net earnings.
Yep. So you might gross $200,000, but then have $100,000 of net income.
And so
that's where you're going to get that
25% off the $100,000.
Off the $100,000.
So then you could only do $25,000, not $70,000.
Right.
Okay.
So there are some limits on that, but maybe the max is the 70. But you have a calculation.
There you go.
Yep.
Perfect. They did up that a little bit. Last year I think it was $69,000. They upped it just a little bit.
Right.
Generous.
Right. Really generous to those. Simple IRAs. Well, Laura and I were talking about simple IRAs a little bit this morning before we got online, but they have upped that to $16,500 this year. It was $16,000 last year. If you're age 50 or older, you can do an additional $3,500 on top of your $16,000. And then this is kind of where, Lauren, you and I were talking a little bit this morning as the IRS has changed it to now. When you get to age like 60,
actually, I think it was over age 50.
Over age 50.
There's an opportunity to increase those limits even by another 10%.
Okay.
And it's for qualified employers. So that's going to be any employer, I think as we were looking at it, was 25 or less employees or 50.
Yeah, 25 or less, yeah.
And or certain large employers, and if you're matching at a 4 or 3% level on that.
Correct.
So there are some qualifications, but there is an ability to even go beyond just those standard contribution limits. Yep.
Okay. So that was good. I mean, that's something new. I think they're saying you can still go back in 24 and
Correct.
capture
For
that as
2024,
well.
that is still an option.
Cool. And then last thing here is 401ks. So 401ks, they did bump that limit up to 23.5. It was 23 last year. I say last year. We're still in this year, aren't we?
True.
Right.
Yeah. I already got us
We're
at
wrapping
25.
it up, though. We're wrapping it up.
Right. We're getting there. And age 50, you could do $7,500 on the catch-up. And then I'm thinking, too, that 10% is an option as well, or have you dug into that?
That was only and to give background, we've had continuing ed the last couple of days, and that's where the conversation came up around the additional 10%, and that was only around the simple plan.
IRA.
Yeah, that's the only area that they updated that contribution.
Okay. Awesome. So that's good news. Thanks for clarifying with us. But I know sometimes people are like, these limits are, 23,000, in a Roth or 401k. And look, if you could do that, that's great, right? If any money that you can put into your 401k is better than nothing, right? And
absolutely.
I always tell clients, they always ask me, what should I be putting in? And I always tell them, look, you know your budget better than I do.
Yeah.
But here's the max, So if you can do this, that's great, But I don't want you eating ramen noodles and sitting on the couch, on a Friday night not doing anything, But so it's important, like I said, just to be putting money away. You know how I like to kind of throw things, out there with percentages and numbers.
Oh, here we go.
Yeah,
Okay. So if I have questions, you want me to hold those until?
You can ask me questions now if you want before I get into the fun numbers.
Okay, because I have a question about that simple plan, right?
Yeah.
So for a small employer group, is the cost to entry on a simple plan less than trying to build a 401k?
It is. When you get into the 401k plan, I'm getting into the weeds here a little bit, but you got to have what we call a third-party administrator on that to make sure
Right.
that it's not top-heavy and the owner's putting in all the money, and so there's that additional layer when you get into a 401k plan. A simple IRA is a notch below that, where you don't have to have a TPA to monitor, that 401k.
Okay.
So typically, and Lauren and I were talking about a simple IRA this morning, is, I've got a business owner where, we did a traditional IRA last year and he wanted to max it out, and that was great. But he's like, hey, I can do a little bit more. So the next step up is you can do a simple, or we can do a 401k. Wasn't quite ready for the 401k because you're looking at probably $2,000 a year. For the 401k, there's a cost for them to manage the account. Then the TPA is going to, have a cost too. So we may not be there yet, for a 401k, but we can come down to the simple, and there's not the cost associated.
Okay.
It can't quite do as much in the simple as you can.
Correct.
the
Your
401k.
your limits are lower.
Lower,
in the
exactly.
simple.
But it's more than the 8,000 you can do in a traditional. In
Correct.
this case, my client was over 50, so he was doing 8,000.
Okay.
So.
And you can use a simple as you can. I'm trying to think of how to.
Right.
Like as a quote unquote retirement plan for your employees
Yes.
as well, correct?
Yes. Yeah.
And then the employer can contribute.
Correct. You can do matching.
You can match.
Yep.
Okay.
Yeah.
Correct.
And that's a good question when it comes to simple and 401k. When it comes to match on a 401k, the business owner, if he doesn't want to, he doesn't have to match the 401k.
Oh.
You don't have to.
Right.
But on a simple IRA, you do have to do a match.
Right.
On a simple IRA.
Okay. And is there a
So-
minimum match?
There is. It's 4%, 3%, something like it's 4
It's
or 3%.
somewhere. Okay.
Yeah.
So there is a minimum.
Yeah.
Interesting.
And you can take that percentage and you can knock it down twice in a 5-year span. So if the owner's like, hey, I don't want
Cash
to match.
flows,
Right.
that's
Okay.
a tight year or something like that.
You got it. Yep.
You have the opportunity to adjust your matching
Yeah.
contribution.
On a simple.
Yep.
So,
Okay.
But
so
you
that's
have
a good
to match.
option
Yeah.
for a smaller
Yeah.
Yes.
Exactly.
employer that.
Trying to get started
Yes.
doing something for the
Okay.
employees.
Well, right,
Absolutely.
because like you said, it could be a small business, right? And don't, like you said earlier,
Yep.
cash flow is a little tight, but you
Yep.
want to keep your employees, right? And
Yep.
so hey, we're going to do a simple. We're going to do a retirement plan.
Okay.
They don't have to know what type of retirement plan it is, but
Sure.
Yeah, but like you said, it's a great way
It
to
gives them opportunity for them to contribute to it. Hopefully the employer is able to match and continue to match.
Right.
Okay.
And you can potentially, as an employer, evolve on past the simple too. So as you continue to grow or cash flow gets better, maybe you want to move into the 401k, and the administrative cost of the $2,000, $3,000, whatever that cost is, becomes less significant, and the employees or you as the employer have the ability to put away larger dollars for your retirement in there.
Right,
So
right.
it's a benefit for both.
Right, you
Okay.
can start tacking on, profit sharing, component to the 401k, and there's just, like Lauren said, there's just the opportunity to put more money away
Yep.
at that point. So, yeah.
Yep.
So, yeah.
I'm realizing why I sell health insurance. That sounds complicated.
well, as you're over here talking too, I'm glad I'm on this side of the table and not
Yep.
that side.
We got
of the
aces
table.
in their places.
Right,
Okay,
well,
I have
right.
one more.
Yeah,
One more.
Sure.
If you have not reached, so we talked about limits, the max that you can put into these accounts. Is there a cutoff date for that?
I'm actually glad you said it because as you were getting ready to talk, I'm like, I should have talked about the cutoff
Right,
date.
cutoff
Okay.
dates. Right.
So thanks for bringing that up. So like traditional IRAs, 401, traditional IRA, Roth IRAs, you actually have till your tax filing deadline next year. So
The
right
due date
now,
of the return.
right.
Yep.
So you have till April 15th. If you file your tax by April 15th, you've got till April 15th to
Okay.
fully fund it.
Yep.
If you do an extension,
Yes, you can
you
do
have
it.
till your extension date to fully fund
Till
your
the due date of the return.
Right. But when it comes to 401k and things of that nature, 401k simple, the contribution everything have to be in year end. Now 401ks are a little different. If we have or if we have profit sharing, then that can
And
be
usually your 401ks have to be established by what, October
15th.
October 15th.
Yep.
So there's an earlier deadline
First
for the
or
401k,
15th, yeah.
and then simples have to be established by 12/31.
12/31.
Correct.
Right. Exactly.
Okay.
Yeah.
So if you're one of those people who's lucky enough to get, an end of year bonus or something like that, and it doesn't come till January, February, March, you could, if you hadn't met your limit, you could throw it in that IRA account?
Correct.
Okay.
If you hadn't filed, If
you hadn't filed yet.
Right.
Okay.
Yep.
Good to know.
Yep. Exactly. So, I was going to talk. Approximately 72% of American adults have some retirement savings.
Okay.
Good.
28%. So if 72% have it,
Right.
it means 28% of adults don't have a retirement savings account.
Correct.
And so, that's one thing I wanted to kind of throw out real quick is, look, I'm an advisor, a lot of advisor out there like, hey, I don't even want to touch you if you don't have 100,000, 250,000, something like that. I don't have that. So, if you're one of those 28% adults that don't have a retirement account, don't be ashamed to pick up the phone and call me. I don't judge. I'd rather you start at age 55 than never.
Correct.
And so, if you're one of those 28%, give me a call. I'd be glad to sit down and have a conversation with you. So, and you don't need thousands of dollars. I literally have some clients that do $25 a month.
But it's something.
It's something.
Yeah.
We're getting them started. We're getting going down that
Right.
road. So, and so then the last thing I'll leave you with here before I finish up and kick it over to Lauren is the median retirement value of retirement accounts out there is $87,000.
Wow.
That is it. That's the median out there.
Ouch.
So think about that.
Okay.
So meaning 50% of households, because the median is right in the middle.
Yeah.
50% of households have less than that.
Oof.
So keep that in
Wow.
mind. So anyway, but hopefully you guys learned something today about
Definitely.
contributions and things you can do to max out your employer plans, traditional IRAs. Let's kick it over to Lorne. Lorne Meinershagen here.
Yes.
He has a CPA company. He has a couple locations. He's in Grain Valley.
Correct.
He's got a location in Lee Summit as well.
Yes.
Lauren and I actually...
And Overland Park.
Overland Park. I
Yep,
didn't know if you wanted me to mention that
that's
or not.
Right. Absolutely. So we have Overland Park as well.
Okay, I didn't know if you wanted me to mention that.
Sure.
But I did know that. But Lauren and I have kind of connected, and full disclosure, Lauren is my CPA.
That's right.
So,
absolutely.
But Lauren and I kind of have a similar background. He comes from a small town.
Yes.
I come from a small town, so we always like to talk
Yes.
about our small town upbringing
Yep.
and the shenanigans that happen
Yes.
in a small town.
Yes.
We don't have time to go into that.
No.
So, no, we don't. So
But it is a simpler life. Very much so.
it is
Very much so.
It is a simpler life. Well, Lauren, welcome.
Thank you.
To our podcast.
Thank you.
And tell us a little bit about
Sure.
Meinershagen and Co.
Okay. Well, I'll be brief here. I do understand for all of those involved or who may be watching that tax is not always the most exciting area. So I will keep it brief and just try to highlight a few things. But Meinershagen & Co., a little bit about my background. I'm a CPA. I went to what was SMSU, but it's Missouri State down in Springfield.
Yep.
Have my CPA license both in Missouri and Kansas. Also worked at UMB for approximately 15 years, $20 billion company, and served in various executive leadership roles there. 2017, I decided my kids were out of high school at that point in time, so I could make a change if I wanted to. I wanted stability while the kids were younger, sort of deal.
Right.
And then acquired the first practice in Grain Valley in 2017. Then I acquired a practice in Lee Summit in 2020, which gave me both the Lee Summit and Overland Park offices. And always looking for opportunity to grow, so we will probably continue to grow, but you have to do it at a measured pace. So as you start out in business, it's like you have these great ideas of how fast you can get there, and then you get in there and you're like, well, maybe we just need to pace ourselves more. So you can
I'm
really
living that right now.
Yeah.
Yes, living that right now.
So it's a challenge at times. So that's a little bit about us. We try to offer guidance to small business owners, medium business. Really we have a significant focus on business, but we also do individual client consulting and things like that as well.
Okay.
So
Okay.
that's kind of our background.
Okay. Great news. What are some hot topics that we've got, going out there in the, CPA world?
Right. Right now it's year-end planning. Everybody's talking about that. And that's your typical occurrence that happens every year. And the one thing I would like for everyone to here is that this is probably a little bit late to be doing year-end planning. People are trying to get in right now,
Right.
but you would have been better to have started this probably, and people forget about this, time gets by, but August is probably about the right time of the year to be thinking about year-end planning. You've had 7-8 months behind you. You kind of know where your business is, and you have a few months in order to make decisions and get things in place. Just like a 401k,
Right.
it's got to be done by October, and
Right.
you got to start those processes.
Right.
So many times people wait until December, and some of our options have expired at this point in time of what we
Okay.
can do.
Right.
And trying to buy things. I had, sometimes clients will come and want to go buy equipment, and I will tell you right now, when you go to the Cat dealership or John Deere, and it's the last week or two of December, they're not going to negotiate on price or their commissions because they know you
They
have
know
to
what
close.
you're doing.
Right.
That's right.
Yeah,
And you have to
okay.
close by year end.
Yeah.
So if you start that process earlier in the year, I believe you're going to be more effective on getting your costs down
Okay.
as
Yeah.
far as what the equipment stuff you're buying. So the one thing I want people to learn is just try to start that earlier.
Yeah.
The other thing right now is BOI. People probably heard about this. This is beneficial ownership information. It's a new requirement by FinCEN, which is
Oh,
part of the
yes.
Treasury.
Yeah.
I know
And
what you're
so
talking about.
everybody, this has been a big deal for this year. A lot of people don't know about it, but you may have heard about it. There was a court case in the last week
Yep.
that has suspended the requirement
Yep.
to do it, but originally your filings were due by December 31st. The penalty is $500 per day. Actually, it's $591 now because it's been indexed up to a max of $10,000 or 2 years in
Great.
prison. So they are after this hard.
My goodness.
Because and it's a very simple filing. You just have to report your address, name, phone number, and give them a copy of your driver's license. And you can go online and do this. And the true website I want everyone to know to go to is fincen.gov/BOI. There's a lot of third parties or what I call promoters that pop up out there when these things come
yeah.
out, and they want to charge you
wanna charge you,
100 or
yes.
500 or whatever.
Right.
And if you search just on BOI, that's one of the first ones that pops up. So I was going through that this morning, and I'm like, okay, make sure that clients or people understand, go to the fincen.gov/BOI so that you're not going to one of these sites. Because we've had some clients go to it, they didn't even realize it was a promoter. They get to the end and they want $200 or $300
Right.
for it. And we do charge as well. We charge $300 if you want us to do it, but I believe it's simple enough. Most people can get through it, so try
Okay.
to do it on your own.
I did it on my own.
It's not hard.
Yeah.
And the one thing I would tell you though is we are encouraging clients to go ahead and file the current court case that has suspended the penalties and deadline is an injunction. There were court cases earlier in the year that tried to do the same thing, and Treasury said they would not abide by them. They would only abide to the plaintiffs in that case, and everybody else still had to comply. This particular one out of Texas was just settled, or the judge just passed down his ruling on it last week. He made it nationwide, but of course the Treasury now is fighting it. And our fear is they're going to lift that requirement in the middle of tax season, and then we're not going to be there to help you on it.
Right.
So that's why we're encouraging clients, go ahead and file. It's really what they're after here is money laundering. And what they're
Okay.
going after is they believe that a lot of shell companies have been set up by bad actors who are trying to flow the money through all these different entities so that what's going on or where the money was derived gets lost as it moves through the shell
other
company.
channels, yeah.
And
So
that's
who
what
has to file that? So which business specifically?
any business that has filed their organization with the Secretary of State, LLCs,
Okay.
partnerships, S corps, C corps. There are some exceptions when you go out there, but it applies to almost all small businesses. So small business owners who have filed documentation with the Secretary of State. That's a key thing that they seem to go back to is Secretary of State.
Okay.
Know that you need to be filing this, okay? And it is due by the end of the year. Again, currently it is suspended that deadline by the injunction, but you might want to save yourself the heartache of having to monitor if that injunction gets lifted, because FinCEN has said once they lift the injunction, game on.
Yeah.
We're back at
Right,
it. sort of
right.
deal.
Yeah.
And is it
So just
intended to be a one-time file or an annual file?
It is a one-time filing,
Okay.
but if your driver's license changes, you have to update that. If your address changes, you have to update that.
Okay.
Contact or a different person, and you have 30 days to do it. If you don't, the $590 per day penalty starts kicking in again. So be aware that that's out there, and be aware. Again, it's not complicated. It's another thing that you have to do that's potentially
Another
could
layer,
get overlooked.
right.
Okay.
And the penalties are not insignificant.
Okay.
Being
Right.
$590 a day. So those are two things that we're hearing a lot about right now. As far as the year-end planning, many times people are looking for equipment, smaller business owners, Section 179, back to the SEP planning. Things that you might be looking at deducting is mileage on your vehicle, cell phones, paying kids. Many small business owners don't think about putting kids on the payroll and paying them.
I have
you
heard
can be
about
doing
that.
Do it because
do?
they can then pay for their own college, their own cars, their own expenses, and you're getting a deduction through the business. And so have them working there, even if they're doing the trash, simple things. I mean,
Christmas cards, birthday cards.
All those things. You can have
I feel
them
like
be
you were
sending
doing
out.
your own Christmas stuff in here the other day.
Oh, that I was.
But it's a way to get the kids involved in the business. And I believe not only is it a tax savings, but it's important. It teaches them, nothing. You don't get anything for nothing. So you need to be working for what you're doing. So a lot of our clients put it on there, and I encourage them. That although it is a tax savings idea, it can also be, I believe, a very good life lesson.
Right.
Is there a maximum that you can?
You usually want to go to the max of what the standard deduction is, so roughly $14,000 is what I would say. You don't want to pay them over that. Then they have to file their own tax return. If you're less than $14,000, they don't have to file, and so it's just a deduction on and they don't have to report.
Okay.
So that's what you're looking for.
Yeah.
Let's see, year-end planning, we were talking about that. Hot topics. Tax season. One thing I think people don't understand is when you get into sending your information into your CPA, your tax accountant, whoever's doing your preparation, make sure you're organized and you have everything. Some people will express concerns about our fees when we're doing something, and many times what drives the fee up is because we've gone back and forth multiple times. And so when you pick a return up and you work it, and then you have to stop, you set it down. Then we've got 300 other returns right behind it, so we go ahead and work those. It may be 2 weeks before we get back. Again, if you don't have it all, we work it, we have to stop. And in the meantime, you forget where you were. Yeah. So it just causes additional time to get into it. So we can take a $600 return and turn it into a $1,000 return pretty quickly.
Okay.
Because like for myself, billing rate $350 an hour, if I put another hour into it, we've gone from $600 to $1,000.
Right. Okay.
So be organized, go in with all of your information, make sure you have it. That helps a ton on the preparation side. Let's see, working with CPAs or other CPA firms, for us, 1 hour upfront meeting just to help coach or look at your information, see if it's a fit and whether or not we should be working together. That's always something you should be looking for if you're looking for a tax preparer. Another thing that I want everyone to be aware of currently is, many of you may or may not know that about 2 years ago the IRS received about $80 billion in additional funding. $40 billion was supposed to be spent on new agents, $40 billion was supposed to be IRS modernization. Congress last year reduced that by $20 billion, but they still have $60 billion. They're on track to hire 3,500 new IRS agents, and they have those, I think they're 70% through that, okay? They're pulling people out of our industry. They're coming after CPAs and other people. And that's another reason it's hard for us to find. But their expectation is for every dollar they spend in salary, they get $11 back in additional taxes. So they see the return on it, okay? So it's a lot.
Yeah.
The other thing that many taxpayers may not know, and you may not know, when a bill goes through Congress, it has to go through what they call reconciliation. If there's a cost to it, how are we going to develop revenue, okay? Some of the bills that are going through right now, one of them has $74 billion in order to balance it of ERC fraud that they're going to go get.
Yeah.
So in order to make this bill balanced, they've got to go find the ERC fraud, okay? And one of the hot topics right now is ERC fraud. They just closed the last, you could voluntarily disclose if you didn't think you should have received it. And ERC, for those that don't recall, during the pandemic, it was called Employer Retention Credit. Right. And if you had employees, you could apply and get a rebate back on your employment taxes that you paid in, and even a credit for some of the wages you were providing to employees. There were 3 ways to get it: government shutdown, drop in revenue, or supply chain disruption. Supply chain disruption, there has been a lot of forms filed on, a lot of claims filed on. During 20, 21, and 22, they paid out approximately $234 billion under this program. They have in the pipeline $578 billion of requests still in queue. They will pay out more in this next year than they did in the 3 years during the pandemic if they were, and a lot of it is due to fraudulent ERC reporting. And if there's anybody out there who went through one of these promoters that said, hey, we'll do this for you and we'll take 20% as our cut. A lot of those were fraudulent, but unfortunately, you as the taxpayer are responsible for it, and the penalties on them are significant. We had one client, and approximately $2 million is what they got. I'm not certain, and they went through a promoter on it, and so they're working through that. But the penalty on that is 75%. So their penalty is $1.5 million if they come in. So these are significant, and some people say, I'm not going to worry about it. It's just, are they going to catch me on it? What causes me concern is that recovery of those fraud dollars are being used to balance bills going through Congress. So that gives them a more significant reason to try to go get these dollars.
That money.
Suddenly they're very motivated.
That's right.
Right.
So they have more motivation now, and so they've tried to stop the fraudulent returns, but they're trying to then recover what already also got away from them.
Yeah.
So those are just something to be aware of, and then just overall audit rates on tax returns. That was the ERC program I was talking about. Tax returns overall, just to give you a perspective, 0.44% of individual returns were audited in 23, 0.7% of corporate returns. So not a lot. Your concern there shouldn't be significant. One thing that is significant, though, the most recent results show from 2019, taxpayers earning less than $100,000. So this is not your big guys. This is a lot of us out there just trying to make a living. They recovered $702 million in 2019. In 2023, they increased that to $7.9 billion. They've tenfold gone after people earning less than $100,000 or reporting less. So just know that they are out there. Their enforcement is increasing dramatically. Some of that may be technology, as they remember. They received the $80 billion, $40 billion for modernization, which is new systems. How can they match 1099s, do those? So there's being more data. The IRS wasn't very good at comparing data. They asked all of us to send it in, but they weren't good at matching it because it was all manual or paper in the back end. Now they're automating. Now they're finding more things, and that's only going to continue. So just be aware of that evolution in the IRS going in the background, that they're going to be a little bit more effective in what they've done than maybe historically. And I think I'm over my 10 minutes, so I'll stop right
now.
there.
I think that was actually great.
Good information. No, actually,
I agree.
I wasn't stopping you because you were flowing with good information. So, and I will, like I said earlier, full disclosure, I use Lorne as my CPA. He does what I like about Lorne, and I used another CPA. Lorne, he does it. I meant September, August, September. We're sitting down, we're looking at the books of where we're at. Do we need to adjust anything? This is what we're doing. And so that's one thing I really do like about Lorne. He walks the
you don't want to wait till the last minute. You just can't. It's too late. It's just too late.
So Lorne, I know you're our guest here today, but all our guests, I don't know if you've watched any of our other podcasts.
I will self-disclose. No, I have not.
I didn't ask Lorne any questions about what he spoke to.
Well, go ahead. I mean, if you want. I'm sorry.
That's okay.
I'm sorry.
So for, let's say, an individual, I'm old enough that I remember going, I can't remember if it was a library, the post office, you pick up your form, you fill it out, you send it in. There are still people who file their own taxes, to this day. How do they protect themselves from being audited?
Probably one of the best things you can do is use a software. So they will tell you that they audit the paper filed, if anybody is still doing that, and I can't imagine very many people are. IRS has a free filing option with TurboTax and other products that are out there. Usually that's how people should, and that's what I would encourage them to do is use some of those softwares where it's, and they're not that cheap, to be honest with you. My son does his own taxes because they're very simple, and he went through TurboTax last year, and he's like, Dad, it was $250 by the time I got through filing because he had a Missouri return, a Kansas return, and a federal. By the time they charge you e-filing fees, additional state fee, it was about $249, I think is where it was. So even if you go online, expect to pay something or use some of those. But it does reduce your risk of audit because those software programs have to go through IRS. They review each of those programs and make sure they're comfortable with the language that is written into the program. So it is going to do some of the edit checks and help you. However, those programs will also do things such as, hey, Do you want to do this to save money? Do you want to do this to save money? I've had clients come in where they answered, well, sure, I want to make an IRA contribution. And they were just checking boxes to get their refund up or their liability down. And then they show up because they got a notice from the state of Missouri saying, we don't see that you ever made an IRA contribution. And they're like, what do you mean? We never planned on. And I said, well, show me your tax return. And they had checked, they made the max IRA contribution because as you finish the return, TurboTax would say, well, would you like to do this to lower your tax liability? Well, they're saying yes.
Well, yeah, I want to do that.
They get the refund back, but they never made the contribution. And they were 3 years behind by the time they found this out.
Oh,
so they're 3 years behind on, and when you're doing $6,000 or $8,000 a year, whatever the max was over that period, you need to put away a lot of money, and you can't do it because you failed. Now you got penalties,
right?
And so that client was very upset.
Yeah.
And the problem was it was their mother preparing the tax return for them.
Oh.
Well, mom was just sitting there, so it created some family conversation.
Yeah, right. Fun conversation.
Yes. So be careful when it asks you those questions at the end about how to get a larger refund or lower your tax liability.
Okay.
Make sure you come and see an Eric if it says about IRA and setting those things up. Because you can do it, you just have to follow through and make the contribution.
Right. Okay.
Yep, yep. So.
Okay, thank you. That was it.
That was it? Okay,
Just
all
that
right.
line.
Well, since you admitted it, I'm going to now shame you for not
that's
watching our first two episodes.
Yes.
So, no, but our guests, we always have a hot seat question.
Okay.
Okay. So
Absolutely.
clear the mind. All right. Ready?
Yes.
So we're in the holiday season, right?
Yes.
Favorite Christmas movie?
Oh, it has to be Christmas Vacation.
Okay, that's a great one.
Has to be. I'm going to see
was
it
so
next
easy.
Tuesday night.
You know what? You stole mine.
No, I'm sorry.
Christmas Vacation.
Absolutely. Absolutely.
Joy of the Month Club.
That's right. Clark, that's a gift that gives all year long. That's a great movie.
Yes, it
great
is.
movie.
So that was mine. Your?
Gosh, that's a great question. I too am a big fan of Christmas Vacation.
Yep.
Every year, I don't remember if it's like, I don't know, TBS, TNT, somebody plays A Christmas Story for 24 hours straight.
Yes.
So we always make sure to watch A Christmas Story.
Yes.
One I found last year that struck my family as very relative is called The Feast of the Seven Fishes. And if you are,
heard of that one.
if you're not an Italian family from Western Pennsylvania, maybe you don't know about the Feast of the Seven Fishes. But my husband is from Pittsburgh, Pennsylvania, from an Italian family, and every Christmas Eve they would make this spaghetti sauce out of all of these different seafood items. Like it was squid, and I don't know. They had these. I can't think of the name of the darn little fried fishes. Anyhow. It's terribly disgusting. So we would always opt for
Not
the
to
pizza.
offend any of
Not
our
to offend-
listeners.
go for it. Maybe they're called, I can't remember. I also have it, on a side note also, when you go to this family dinner, right, on Christmas Eve, it was my first year. I'd never seen anything like this. And there are these adorable little, like, have you ever had like the Chinese donuts maybe that are like, covered in a little bit of sugar. They're like a fried donut. They got sugar on top. So there is a plate of these, and I'm like, yes, I can eat that.
Yes.
I picked one up and I took a bite. There were anchovies inside that thing. Like, I don't know who thinks that's a good idea. But anyhow, this Feast of the Seven Fishes just really hit home for us because it was very true to how my husband grew up, and when I was thrown into this family, all of the strange traditions they had. It's just it was a very sweet movie that just really hit home for us. So yeah, that's a new one that probably not a lot of people have seen.
I'll have to watch it.
I really
have a
enjoy.
reason to.
Yes.
Yes.
So, all right. I'm a little disappointed though that you didn't say Elf.
Well, trust me, and I've already watched A Christmas Story last weekend, so we watched it. And so Elf is a good one as well. You're an angry elf. I love that. And for those that don't know, my wife is less than 5 feet tall, so she gets that comment all the time. I get home and she's an angry elf some evenings. So
we went to a Halloween party this year, and
Yes.
he was dressed as Buddy the Elf.
Yes, Buddy the
that's
Elf.
hilarious.
Yes, there are some photos. So
I know. I might have to get that for the podcast
Yes.
and get that up on the screen.
Yes, so
I
accountants
happen to
can get
know.
out and relax a little bit every now and then.
So I think the question this time of year is always 2 movies come to mind. Actually, 3.
I know what you're going to say.
So Die
Hard.
Hard, Gremlins, and Nightmare
Alone.
Before Christmas.
Home Alone.
Home Alone. Like,
Yep.
are they Christmas movies?
I think so, just because of
You
the
do?
time period
So
that
Okay.
they're set.
Yeah.
Okay.
Yeah.
Yeah,
So,
I agree. I agree. And I also like what's the one with Bing Crosby, White Christmas
White
and
Christmas.
things like that.
You know, I've
So,
never seen it.
I
Oh.
couldn't say that I've seen it either.
Yeah.
I've seen
so-
A Wonderful Life. I haven't
That's
seen.
another one of my
wait, there's
favorites.
another- White
Miracle,
Christmas,
34th Street.
Haven't
So,
seen that
yeah.
one.
Yeah.
So those are
Four
also.
Christmases is another good one.
I have not seen that one.
Oh, you have to see it.
There you
that
go.
right?
Vince Vaughn and Reese Witherspoon. It's very funny.
Is it?
Yeah, it's very funny.
yeah, I'll have to
You'll
watch
enjoy that one.
Well, I know we're running. I know Lauren's got a hard
Yes.
stop here.
I do.
We need to get boogieing. But real quick, since you haven't watched the last
Sure.
podcast, you're not going to get this. But we did. It was after Halloween, right?
Okay.
And so we had to go around. What's our favorite candy?
Uh-huh.
And I said,
I don't remember.
whatchamacallit.
Oh, and I didn't even know what it was.
She doesn't even know what whatchamacallit is. You know what whatchamacallit
Yes.
is? And she never had it, never seen it. So guess
I'm just
what?
clearly so
You've
much
all
younger than all of you.
All of our viewers are probably looking at this plate going, what is this napkin doing here? So guess what I have under
Whatchamacallit.
I have a whatchamacallit
Now,
today.
hopefully you have the wrapper too, so she knows what to look for.
Well, now you don't have any allergies
No,
or anything.
no.
So
This does
I-
not look pleasing.
It's
Does it have the Crispies in it?
it does.
Crackle.
Okay.
It's got a little crack. Come on, you got just a little bit.
Okay, I'm going to give it a shot.
All right.
I was actually hoping these were Christmas cookies, so I am a little bit disappointed. I love a good sugar cookie. All right, whatchamacallit.
Whatchamacallit, here we go.
47 years is how long I've waited.
There you go.
Yeah. And they probably came out 80s?
Yeah, 80s
I'm trying
probably,
to
yeah.
think. I'm trying to
Yeah.
think when it was. So they got some caramel in it too?
Yep.
Yeah.
A little peanut butter. So no. Oh.
So maybe it's just you. I don't know.
Right?
It's the Crispies.
You don't like the Crispies?
No, I don't like anything that has the
All right. Well, you don't have to
crispy.
finish it.
I don't?
No, you don't.
Okay.
I just want you to try it. So
There you go.
I do like this part, like the caramely stuff at the
Mhm.
top.
Well, you can just eat
if
the
there was
top.
a way to
cut it.
cut it, I would be all in.
Yeah. All right, guys. That was episode 3. I would like to thank Lorne
Yes.
Meinershagen with Meinershagen and Co.
Yep.
for joining us today. Lorne, real quick, how can they reach you? If they wanna-
On the web, we're at MC, that's M as in Mary, C as in Charlie, CPA.com.
Okay.
So that best way would be to call in. Green Valley's 816-847-0536.
Okay.
And Lee Summon is 816-347-1600.
All right. Well, Lauren, once again, thanks for joining us this
Absolutely.
morning. Partner in crime here, Tara Lavelle, Von Fire Insurance. I'm Eric Sporing, ECS Capital Investments. Catch you next month, episode 4.
And I'll try to find some sizzling for you.
What is that? That's it. Happy
We're out.
holidays.
Right. Happy holidays.